Hello, and thank you to everyone for joining today's Family Office Network's webinar series. Today's exclusive webinar is featuring Modus Create. Pat Sheridan is co-founder and managing partner, and will be presenting for us today. With a BFA from Corcoran School, an MBA from Georgetown, Pat's focus is on the intersection of design, technology, and business. He is a graduate of Mindshare, Lean Startup Mentor, former entrepreneur in residence of Georgetown University, and a member of the George Washington University Columbian College of Arts and Sciences Advisory Council. At the end of today's presentation, we will have plenty of time for Q&A. We encourage your questions, so please use your questions chat option on the right side of your screen to send over any questions you have. And with that said, Pat, I'm going to let you take it from here.
Thanks, Lindsay. It's great to be with everyone today to share some thoughts on obviously a pressing topic. The past year has taught us all a lot of hard lessons, but for sure there's also a lot of valuable insights that we can gain. So let's dive in. So a little about myself, and thanks for the intro, Lindsay. As Lindsay mentioned, I'm managing partner and co-founder of Modus Create. I have over 20 years of experience in emerging tech ventures. Was part of 3 venture-funded startups in the late 90s, and I've really focused a large part of my career on helping Fortune 500 companies scale technology platforms and modernize their resulting operations. I sold my first tech-enabled services firm to a private equity roll-up in 2009, and spent most of that time in New York with the major publishers as they struggled to shift their business models from traditional print media to web and app models. And based on my experience in New York, I founded Modus Create 10 years ago to focus on that intersection of technology innovation and disruption, what is now more commonly referred to as digital transformation. In addition to my role at Modus, I focus on how to best integrate the tech community with public sector workforce development initiatives and emerging trends for courseware in academia. I serve on the MAC Advisory Council at Georgetown, as Lindsay mentioned, and also the National Council for the Columbian College of Arts and Science at GW. And I've been involved with the Lean Startup movement since its founding and designed many of the early rapid prototype and rapid product development engagements that are the core of Modus's offering. So let's talk a little bit about Modus Create. Modus Create is a consulting company focused on enabling digital channels. Our work focuses on the needs of 3 core sectors: the Global 1000, mid-market SaaS platforms, and venture-funded startups. We typically help bring new products to life, modernize legacy platforms, and help firms improve how they manage the software and product life cycles. We focus on 4 key practice areas: product strategy, customer experience, agile, which is primarily software development, and security. And what's unique about Modus is we're a highly distributed team model with 3 international offices, which act more like embassies, and over 300 consultants that have been working from home for over 10 years. And it's kind of important to note that for over 10 years, this has been a completely remote workforce model. And not just because of kind of a high-level trend for remote, but because of this kind of emerging need for increased amounts of talent in technologies that are less than 3 years old. And a lot of the core recipe for success in running this model focuses on mid-career professionals that have 4 to 10 years of experience, that are fluent in English, and this is the real differentiator in having a highly engaged remote model versus a more traditional outsource or offshore model. And then focusing on time zone alignment to work. So one of the core things that really makes us different is this idea that global access to talent in emerging technologies is really making or breaking product strategies for all classes of our clients. The talent model reflects the market reality that major employment hubs aren't able to produce enough talent to meet the demand of the industrialized world. And the talent model, excuse me, sorry, I skipped over my note there. Additionally, as more markets come online with high-speed internet and stable power, we're seeing that strong talent is available in time zone aligned regions that previously were not available. And so Modus doesn't have an industry specific focus. We really work in horizontals across all major industries. and that gives us a unique perspective. We tend to focus on partnerships with leading tech companies and participation in the open source software world that's reflective of the best of breed tools that high performing teams are using to bring digital products to market more quickly. And we really kind of look at this in three layers. The first is collaboration tools. So as access to offices is completely restricted, how do you engage high collaborative work and prioritization and decision making? How do you then look at product planning and analytic tools? How do you define with increasing number of digital channels to support what features to build next to outpace your competitors? And then at the lowest level, looking at the core capabilities of a firm to enable agile product management and software delivery. And this intimate relationship we have with our clients really gives us a unique view into what many companies have done over the last 12 months and are doing to gain a foothold in the post-COVID economy. We're seeing what experiments they're running and what's working and what's not. So let's zoom out and take a look at kind of the macro view and how COVID fits into a lot of trends that were already underway in the marketplace. And so at Modus, our business model really aligns to this macro thesis around software-powered global economy. The idea that there's going to be more software in the future, not less, and more emerging technology, not less, and that new disruptive technology is going to come in faster and faster waves, with slower or smaller plateaus between waves. And that the democratization of tools is really lowering the barrier to entry of a lot of emerging startup threats to traditional enterprises. And so this core thesis of Modus and the broader digital economy is that high bandwidth plus increased frequency of new technology plus rapid commodification of tools is really what is creating and in a sense destroying markets very quickly. And so if we look at 2010 to 2015, this first 5-year wave is what we really were looking at as the rise of the smartphone, the connected person. And by 2015, the idea that there would not be a lot of cost associated with free or unlimited data transfer on phones, plus a cost of device that would allow more than 65% of consumers to have a smartphone would really create the smartphone economy. The next wave, and the one that led right up to the doorstep of COVID, is what we would call enterprise digital transformation. The idea now that for most major enterprises, technology is not a cost center, but shifting to a revenue center, and that it requires a different organizational structure and cultural dynamic to compete with an ever-growing number of startup threats. And I'll skip over COVID for a minute, but the world that we were kind of looking at from 2020 to 2025 and beyond is this race to 5G and IoT. And the basic idea there is that as we look to the connected car and the connected home and the connected industry, the idea that anything that could be plugged in to a power grid could be controlled through a home automation or industrial automation process. And so a lot of the macro trends were kind of leading to changes in the future of work, the future of the economy, the future of education. And what COVID did as an outlier event was really accelerate and force the adoption of things that we assumed were 5 to 10 years out that had a rapid fast forwarding to today. And so if we look at these kind of underlying trends, again, first starting with globalization as part of the big picture. Now, I'm not going to focus on manufacturing, but really more so from a digital perspective. This idea that first you would look at in the mid-2000s, this idea of outsourcing to a digital kind of development partner that would have large operations in a cost advantageous region, but would require a time shift and what we would call cognitive overhead to manage quality and delivery of those teams. And then as you moved into the 2010s, we started to see the deconstruction of that, where individual developers could be supported whether working from home or working in individual countries, and you didn't need to have a large outsourced partner. And as we forward into 2020, what we're seeing is the models that supported a globalized workforce actually are extending quickly beyond just engineering or technology divisions within large companies and focusing on any level of staff in any department, whether it's marketing, HR, or operations. And so now if we go up a level and look at the overlay of digitization trends on top of globalization, starting with the advent of computers in the workplace, and then rapidly with cost price for a home computer going under $500 into the home. As we get into the 2000s, we see laptops replacing desktops and the smartphone replacing laptops. And as we kind of move more quickly, we see as we move past 2010 that we start to see connected televisions, we start to see connected cars, and then, as I mentioned earlier, this kind of broader home automation movement. And I'm not quite sure about the name dispersion, if it's going to stick as the kind of final term here, but this idea that with these advances in globalization in the connected world, and these advances in the kind of technology that supports connecting every aspect of life, that we see a rapid commodification and democratization enabled by energy stability, high-speed, always-on internet access, and free or near-free technology. And many of the themes and the idea of dispersion really are also associated with what folks talk about with the green economy, which is the idea that there could be reduced corporate travel because of collaboration and video conferencing tools, reduced commuting because of work from home abilities. And this idea that COVID has just accelerated these trends that were already part of the broader kind of macro picture. And then as we look deeper into the larger trends of workforce skills development, the idea of self-educated developers, I think over 1/3 of the engineers within Modus are self-educated or have learned through online free resources as opposed to traditional degrees. And this idea that micro-credentialing for marketable skills is becoming a preference for millennials over credentialed degrees. And the idea that open source frameworks are winning in the market over closed source solutions. And so as we kind of shift into these trends I hear a lot in the academic world, the future of work, the future of education, the future of commerce. And if we first focus on the future of work, what we're talking about is this progressing rapidly from that manufacturing to this digital first economy, where everything that can be automated will be automated, where there's the ability to have a high-performing distributed workforce. We've seen many freelance platforms, but we haven't really seen models that really give kind of strong team-based remote work options for the gig economy. We're seeing a multi-generational workforce where folks have a second and third career. Everyone has been inundated with concepts from the gig economy, which I think will continue to mature. And then we're seeing the rise of this concept of the digital nomad, the idea that you can work and travel and stay productive, but not necessarily have to be bound to where you live to have employment. And so as this kind of matures into the back office, again, we're seeing these leveraged platforms start to support this dynamic workforce. Platforms like Salesforce, ServiceNow, or Atlassian are essentially automating what are very manual workflows. We're seeing the advance of cloud provider migrations and multi-cloud operations. And we're seeing these, what I would call middle step trends, things like robotic process automation, which enable a firm with a lot of legacy technical debt to automate workflow without having to update the underlying systems. And I think we're already seeing that. This is changing where people are choosing to live, and there's changing what companies are willing to pay as a result. As we shift over to the future of education, again, this concept of micro-credentialing over degrees, this idea that internationally, when I travel, we see many kind of public-private initiatives for knowledge work boot camps, which can train a traditional retail employee to participate in knowledge work in 90 to 180 days. And the idea that on-the-job credentialing that is sponsored by the underlying platforms like AWS provide kind of clear credential paths for verified employment skills. And this is also in the academic sense, leading to a lot of new business incubators where entrepreneurship education is seen as kind of highly desirable by students and integrating into the business community with new venture competitions. And so lastly, if we look at the commerce section, the idea that companies are competing in an omni-channel environment, the idea that a customer journey could cross multiple channels from an app on a phone to a web portal to a retail point of sale application. And the idea of marrying all the big data and intelligence with smarter decisions that drive smarter marketing campaigns, can power dynamic offers and rewards through all these multiple channels, and provide context-aware applications, whether it's location or behavioral analytics and patterns. And this is leading a lot of the clients we work with to focus on customer acquisition through these new channels. A lot of that is focused on embedded commerce. You'll see some trends that I'll talk about on a couple slides down the road where you see embedded e-commerce in social channels. So the idea of Instagram stores connecting seamlessly to Shopify type backends, where you can have a complete no-code e-commerce with dropship experience, which is enabling a whole new set of small, medium business enterprises without having to write any legacy code. And so all of this, as we kind of look at the rise of the progression to 5G and IoT, we really are seeing some level of conflict potential on the horizon where large enterprises don't want to be bound to the delivery channel of just the App Store. And so the more that we have high bandwidth, the more that we have open source technology, the more we see the potential for providers like Apple with the App Store and Google with Google Play to have potential for conflict with providers that don't want to use their services and share their revenue. And so, even before COVID, if we look at the three customer segments that we primarily serve, we're seeing some strong kind of positionings that were already happening. The first within enterprises is a lot of multi-year reorganization that is kind of addressing the dynamic where you have a centralized global operations serving multiple brands under management. So whether it's a hotel firm with multiple different types of brands, or an automaker with multiple different car brands, or a pharmaceutical company with multiple medication brands, the idea that the traditional model of multiple independent agencies in different global markets serving each brand is being restructured to a new digital services department with a new set of platform tools and a focus on automation and a focus on digital scaffolding. And so we see this taking different forms at enterprise, whether it's the digital services department or just a redefinition of the office of the CMO. Definitely a trend that has been accelerated through COVID. When we look at the private equity and mid-market clients that we work with, there continues to be strong M&A divestiture activity. A lot of that, though, is focused on a lot of capital budget request activities that we get involved in to take a look at the amount of legacy technical debt and the kind of return on investment to rewrite and address that debt or rebuild to modernize to new platforms. The other theme that was emerging pre-COVID is a focus on modernization efforts that looks at the idea of automation and security, the idea that a data leak or a loss of consumer trust could be more detrimental than trying to improve things in the user experience. And then in the startup ecosystem, it's kind of the same as it has been, the idea that time to market is what matters. Startups do not have the legacy technical debt of most mid-market or enterprise firms for obvious reasons. They can also move more quickly to market, really focused on competing on a compelling user experience. They're focusing on cloud native architectures and platforms that scale infrastructure, automatically. And they're taking an approach that really starts a lot of customer acquisition through the mobile channels and then enables broader kind of ecosystem partnerships by having what we would call an API strategy. So as we came into 2020, we really had a front row seat at looking at how most companies were reacting to the crisis. In the first half of 2020, many companies were scrambling to adopt new working models, maintain productivity, and ensure alignment and security in a suddenly remote world. In March of 2020, when Sequoia Capital published its open letter email to the portfolio companies, it had broader shutters throughout the startup ecosystem. It was really enforcing companies to prepare for the absolute worst case scenario, look at all the financial levers that could conserve cash and renegotiate payment terms, look at operational items with remote working, vendor risk management, and understanding their own business continuity planning. And we really kind of saw three waves of the reaction phase of the first 2 quarters of last year. The first was that everyone in the primarily affected industries that we worked with, which is travel, hospitality, and events, came to full stop. And so how they kind of looked to address, the basics of business continuity. The secondarily affected section of our client base is what we would call massive model switch. And this is really looking at retail, dining, automotive, folks that could quickly leverage digital channels to the ability that they had partnership and internal capabilities to do so, to maintain revenue and some version of digitized operations. There's a lot of what we call tertiary responses, which really looked at the internal supply chain, labor turnover, staff engagement, internal operations and security, and then the sector of our client base that really was in an advanced position. This was primarily ed tech, health, cyber. There was a lot of uptick and surge immediately following. And so as a company, we found ourselves being engaged by many of our clients because of our existing remote capabilities to create some rapid onboarding materials for them to help them shift their own workforce from an office-based model to a work-from-home model. As we got into the second half of the year, though, we saw a major uptick as, again, the leaders kind of began to execute on new initiatives and aggressively move core business into digital channels. So this was really characterized by what we call COVID reorgs, these quick, sharp focus on soft cost and waste, rebalance teams, and in many cases gave firms opportunities to address outstanding concerns that they weren't kind of primarily focused on addressing. There was this idea of a talent land grab. So I think, many of us saw the announcements by companies like Airbnb and Uber and Lyft and Marriott that were forced to dismiss amazing tech talent because of just their inability to maintain their workforce. And we saw many just-in-time job posting sites that came available on LinkedIn, which allowed a whole set of other firms to kind of pull in and grab that talent. And then we saw leading firms really focus their staff to focus on being part of the solution. So with the increased stress of having a forced remote workforce, it really wasn't about being a high-performing team, but it was about keeping folks focused on what is within their control. And a lot of the things, this be part of the solution approach, we saw work very well with a myriad of clients across our customer base, looking at ideas that would get involved in projects to help distributed processing, help scientists decode the virus, that helped just things in the local community, build apps that would help folks find everything from toilet paper to essentials. But this idea of being part of the solution as a rally point for teams to maintain continuity and rapport. And I think these kind of efforts really set the groundwork for new cultural norms among remote teams. The idea that work has additional context beyond employment, that it can be a platform for ongoing skills development, it can be a platform for contributing to your the tools of your trade craft, and a platform for contributing to a better community and society. And so I'll shift the second half of my presentation here to really dive into a couple of the industries that we have a lot of direct experience and look at some of the opportunities and some of the threats and opportunity spaces we still think are being discovered today. So starting with ed tech. I mean, again, the virtual classroom options still, as I think any of us with children on the call would know, continue to have struggles. It's a crowded space. And in many ways, those of us that have been working from a remote setting have seen the same battle kind of take place between tools like Zoom and WebEx and GoToMeeting and Google Hangouts. No one really is seeming to fully have a one-size-fits-all complete offering that can dominate the space. And likely there'll need to be tailored options, especially in ed tech, for age and learning style, and the idea that every student now would be required to have a laptop and high-speed internet at home. And as we shift focus to more startups we work with that are focused on undergrad and postgrad, there's the entire virtualization of the college experience, everything from the acceptance letter to how to navigate a campus to having kind of the virtual graduation, and then this kind of mobile concierge that enables you to interact with all departments of the school. So that's where we're seeing a lot of the opportunities in ed tech. The folks that are driving to kind of carve out their space for virtual classroom support, understanding home hybrid learning models and the role of technology, and then behind the scenes, leveraging AI and machine learning on learning effectiveness. And the idea that with the virtual classroom models, more data points are being exposed than have ever existed to understand attendance, attention, classroom engagement. And we're seeing and hearing a ton of ideas that are just starting to get productized. As we shift over to pharma and health tech, again, what we're seeing a lot of is there's a lot of ideas around getting good information out, whether it's in a corporate setting or in a public health setting on COVID info and COVID exposure tracking, looking at direct projects we've been involved in on vaccine rollout, and this idea that there's already a microbloom of startups looking at COVID rapid testing and extending partnerships between the benefits providers, the insurance companies, distribution networks like Walgreens, Walmart, CVS, and others, and having kind of integrated wellness check capabilities. In general, the themes we're seeing before the pandemic had to do with this idea of health outcomes and companion applications that help consumers kind of manage the health outcomes without being funneled straight to medication, and creating kind of a brand stickiness, if you will, with some major pharma providers. In the retail and e-commerce space, we're seeing the most amount of innovation and disruption. You know, the challenge in our experience is that there's always been legacy technology problems that the large franchisors that we've been involved in building B2C experiences for haven't really ever streamlined the back end, that throughout their franchise network, there's a myriad of technology stacks and point of sale systems that are out of their control that they have to integrate with. And within the kind of retail operations is a higher degree of labor turnover as a result of the pandemic. What we're seeing though in the opportunity space is that all the firms on the retail side that we're dealing with have gone from single digit mobile sales targets to over 30 and 40%. And this rapid expansion of, again, this kind of social influencer, new digital channels, and how to integrate commerce into those channels. On fintech, which is another one that we, kind of bump into a lot, for the traditional banking sector, all of the on-premises models were, for the most part, completely shut down or limited. There was a sore lack of any support for digital signature in core kind of business operations, and that the customer portals to support small business banking were 10 and 15 years behind from a customer experience perspective where they should be. And many single point of focus apps with amazing user experiences are coming onto the market every day, democratizing access to different financial capabilities and quickly scaling to serve underserved markets. So if we just look at the example of, say, what Robinhood was able to do recently, focused on retail investors, this idea that building accessible platforms, there are strong models out from very decent startup threats to traditional providers that the banks now have to pay more attention to. But at the same time, there's also massive opportunity spaces that we're seeing across our clients in fintech. The idea to do a complete customer experience rethink across digital channels, reorient the brand affinity from the person at the branch to an application that provides value, to look at all the ways to enable contactless payments, and to bring in the idea of digital signing, to explore better options for identity verification and other items that don't require people to come and sign paperwork in person. We're seeing a lot on the regulatory side of secure cloud operations. I think that is a space that's going to continue to grow. And then things that people talk a lot that we don't see a lot right now in terms of the projects we're involved in around blockchain and Bitcoin or altcoin. You know, we're not seeing a lot of deal flow. And from our perspective, it may be related to some regulatory uncertainty, that potentially these firms are looking at more aggressive M&A strategies due to big misses where they failed to acquire some companies that they should have, like Spotify and others. But what we expect is to see more vertical integration of platforms. What we're seeing is that as the merchant gateway side of a lot of traditional financial players falls away, they need to create more vertically integrated offerings to enable small business beyond banking apps, things that could help them manage inventory or manage different types of business operations. In automotive, we're seeing a lot of innovation and disruption as well. The idea, again, that's similar to retail, the kind of balance of a shutdown in dealer operations with brand direct sales or virtual sales models, the ability to bring services and support into online space has been a challenge, but one that's been getting addressed quickly. And where we see a lot of opportunities here have to do with the interplay between the connected person, the connected car, the connected home. There's an entirely new set of customer journeys that can be explored that would really focus on brand loyalty. So here we're looking at On one hand, we're looking at a web portal to design and customize a car. It can involve 3D models and kind of virtual experience. On the right is an app, a screenshot of a companion app to manage your car experience. And the idea that there's multiple integration opportunities for connecting economic value and channel partnerships. The idea that these companion apps and virtual sales could overtake the in-dealer experience are things that we see a lot of experimentation happening with currently and a lot of room to grow. On the hospitality side, again, there's a lot of fairly obvious changes just related to the lack of travel, but where we see a lot of movement happening is around channel promotions, around the rewards app, and understanding all the other ways to do channel partner deals to maintain some brand affinity, even while actual travel is diminished, and tie-ins to credit card promotions and, again, other kind of sponsored partnerships. There's a lot of delivering digital experiences with the broader rewards ecosystem. And we're seeing some potential for emerging models where with this concept of travel experiences over just the hotel room, and the idea that with a lot of digital nomads kind of exploring employment in the US while not residing in the US, we're seeing trends that could enable hospitality, but still need some time to shake out. We've seen Costa Rica, where we have an office, offer a digital nomad work visa for over 12 months for US citizens. We've seen the same happen in Croatia. And we think, again, this could be a potential boon for Airbnb type platforms. And so as we shift over to the media side of the work we're doing, generally what the trend we've seen in media applications is that you're very vulnerable to the platforms that you sit on top of. And if we just kind of look at, concepts that innovate, that get quickly proliferated, the idea of, say, something like Instagram stories is a feature for, user-generated content creation that gets proven in one social media platform, can quickly kind of proliferate to Facebook, to LinkedIn. We haven't seen it yet in apps like Spotify, but again, we think as their model continues to evolve beyond music content with podcasts and other user-created content, that there will be some dominant patterns for how these apps perform, which may limit some of the space for startup innovation. But in terms of content creation tools, we're seeing a lot within the startups that we interact with around content discovery and aggregation. This idea that in the post kind of pandemic society, with the minimization of kind of corporate events and industry events, the idea that we've seen a micro bloom in B2B podcasts as a customer acquisition and brand awareness strategy, which is creating a whole secondary opportunity space for creator enablement, which is content production tools, post-production and editing tools, basically allowing for a democratization of very high refined content. And then what we're seeing on the podcast side is a push to more integrated advertising and e-commerce integration. So as more small businesses are looking to get brand visibility and awareness by creating a podcast, it is then how does that convert over to licensing some content or creating a subscription service, whether it's a fitness trainer who has a podcast that really what they're trying to do is funnel their listeners into signing up for some online health health activities. And then we're just kind of also seeing this last trend around identify and enter new channels. So the idea that brands are trying to be in every channel that their customers are. And then lastly, we'll kind of take a look at cyber. So, particular to the DC area where I'm based, very strong and active cyber startup community and mature cyber companies. Many aspects of this market can be fairly crowded and overwhelming to a lot of CIOs. So defining the right partner ecosystem really seems to be the key across our customer base. And we're seeing a whole new set of entrants in the cyber community around AI and machine learning powered offerings that challenge the traditional rule-based or workflow-based providers. And so integrating a lot of the sales tools for customer acquisition in this market, we see a lot of startups focusing on how to integrate their tool chain with the compliance and audit reports that help CIOs understand what tools they need to run their business, and using a lot of applications to help educate the client through the sales process. And so on the ongoing monitoring side of the business, as I mentioned, we see a lot of introduction of AI and machine learning to make sense of large-scale data workflows, and a lot of emphasis on highly powered data visualization, decision science, and workflow integrations. And so with that broad kind of view covered, I guess, Lindsay, we can see if there's any questions that have come in, and happy to address anything that the audience has on their mind.
Pat, thank you so much. Great job for the high-level overview. I appreciate that, and I know all of our attendees do as well. Yes, again, using your questions chat option on the right side of your screen to send over any questions that you have. Pat, if it's okay with you, I'm just going to jump right into some questions so we can move right along here. First question, what have you learned about keeping remote employees engaged?
That's a great question, Lindsay. You know, from my perspective, a lot of the firms that are winning are really thinking of the company as a platform for employee success. And so what that means is there's a lot of kind of learning and development opportunities that you can integrate into someone's career plan. And so for us at Modus, what seems to work best is really engaging in the industry, the things that contribute to our core business, create opportunities for employees to participate, and then try to build what we would call a virtuous cycle. So this idea that there are key routines in an employee life cycle, not just onboarding people, which is more difficult in a virtual environment, but really think about welcoming routines. How does your team celebrate? You know, how do you kind of identify with the company, you know, when you don't have a physical office to attend? So for us, there's a lot more that goes into producing a lot of corporate swag, if you will, and t-shirts and kind of materials, not just for marketing and events that don't exist, but so that when people are on digital virtual calls with each other, they can see and identify because they're all wearing company branded materials.
Keep it exciting, right?
Yeah, you got to keep people interested.
Perfect. And Pat, where do you see teams struggling the most in this in their transformation efforts?
Yeah, so this one is kind of a little bit of a harder one. I think it boils down to this idea that you have, in a lot of, especially the larger firms, you have the old guard and the status quo versus the new guard. And, you know, managing kind of how do you support the champions that are trying to move a large organization to support more innovation and counter disruption with new kind of cultural norms. And large companies, the reality is many times they take years to transform. And so what we've seen the kind of best of breed companies doing is focusing beyond just a vanity project with some executive sponsorship and really focusing on what are the new capabilities that our firm needs, that we need to bring inside the building and not just have kind of external partner support. And so from that perspective, we're seeing a lot of companies rethink how they engage their partners and really focus on partners that help them build their own new internal capabilities.
Great. And what emerging channels are you seeing entrepreneurs shifting focus on? Or enterprises or CEOs or both, maybe?
Yeah, so what we're kind of seeing a lot in terms of, you know, in the, I guess, emerging channels is, and it's, you know, I guess it's kind of no groundbreaking news, but many firms are still struggling to adapt to a mobile-first strategy. And so the idea that the first exposure that a consumer could get to your brand is through an app, in an app store, or through a mobile web presence. And so once I think folks get beyond that, what we're seeing is what's being called this omni-channel strategy, but it's really looking at how do we move into, starting first, I guess, with the connected home, how do we move across channels? So, you know, increasingly folks are getting Alexa voice controls. How do we have apps that we can just speak without having to download to the connected home? Or increasingly the interactive television or the kind of home automation little kitchen portal. How do we get our brand onto all of those channels?
Great. And is there some good advice you can give companies that would maybe be struggling to run remotely?
Absolutely. So I think, you know, the first thing there is just the basics, right? You know, a lot of what firms struggle with is just to really get folks productive at home. And so understanding how to just move the workforce before you try to get more aggressive with more kind of sophisticated engagement. The second is firms that really struggle to define what are the rules of engagement for our communications channel. I think even for a company like Modus that has always been 100% remote, you know, what we've noticed is what is appropriate communication that should be email, what is okay for Slack, when should we be getting on a video call, and to try to establish some of those norms. Second to that is where people feel fatigued because they feel like all day they're on an 8-hour Zoom or Microsoft Teams meeting. How do you protect work time? And then the last is, whether it's at the team level or the department level, how do you kind of, bake in some planned kind of team gel time, or say a virtual happy hour, things that allow the team to have a non-work level conversation with their colleagues.
That's a great idea. That sounds fun too. I need to tell my boss about this.
Excellent.
Let's see, next question. Will this organization as a platform approach work for all industries?
Well, I guess, that's an it depends a little bit. I think that, look, if you're, kind of a brick and mortar, right, primarily the world that we are focused on, where my effort and energy is focused, is on the software enablement, right, of large scale firms. And so, I think for the broad, tech enabled enterprise, I think that many of these conversations that we're having are going to become commonplace, and that, again, there's going to just be kind of firms that people try to model certain behaviors on, but at a certain extent, there's going to be a baseline support for a hybrid work environment and for a remote team culture that's going to be part of the new normal.
Fantastic. Sounds really awesome. Pat, that seems to be all the questions for now. Is there anything else that you would like to add before we say our goodbyes today?
No, I think it's been a great use of time. I'm happy to share what we're seeing from the front, and I really appreciate Family Office Network making this conversation possible.
Thanks, Pat. And yes, to all of our attendees, thank you so much for joining us today. I'll personally be in touch with all of you. So if there's any other questions that you have, please feel free to reach out and we'll get you in direct contact with Pat Sheridan. We wish you a happy day. Thank you so much.
Thank you.